Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a brand new day and hoping that the things turn around for the better course after we did see that the street logged back-to-back losses. But for now, the GIFT Nifty is indicating a subdued start for the markets, but the global picture has been quite optimistic to start off the trader. But we did see that the AI trade play out in the global markets. If you look at the US markets, they've ended higher overnight. The S&P 500 gained about 1.5%, Dow jumped 200 points, and Nasdaq also logged its best single day since the month of May itself. Now, all of this, optimism came as after Google upgraded its AI model last week, which was your Gemini 3, and that's why we saw that Alphabet shares have also popped in the trade. 6% gains coming in for Alphabet as well. And we also saw some other AI-related stocks also gain in US trade. We did see Nvidia jump by about 2%. Chipmaker Broadcom shares also soared about 11% in US trading hours as well. But not just this, the Asian Pacific markets also edged higher this morning. Both the Japanese and Korean markets built into the optimism of this AI trade play as well. But apart from this, the general spirit is quite lifted on the hopes that the rate cuts by the US Federal Reserve would materialize in the next meeting, which is in December. And now markets are already pricing in an about 80% chance of a Fed rate cut as soon as December itself. So yes, the optimism was well reflected in the markets yesterday when it comes to from the global front. But when it comes to Indian markets, as a result of the Fed rate cut bets, we did see that the IT stocks were one of the biggest and the sole gainers, despite the breadth remained quite weak for an overall benchmark index as well. But yes, now how all of these cues will take ahead of our markets on the day of its monthly expiry as well is something that we'll understand from our experts, which will be joining later in the show. We'll also be discussing some individual stock movers. So keep posting your stock related queries on our live feed and we'll take them up shortly as well. But before we move on further into the show, let's take a quick check of the top headlines, Sasa. Stocks on Wall Street end Monday's session as higher as shares of Alphabet reignite the AI trade. S&P 500 jumps 1.5%, while the Nasdaq registers the best single day since May. Asia Pacific markets have also opened higher, tracking cues from Wall Street, but the GIFT Nifty is indicating a quiet start for our own markets. Crude oil prices settle over 1% higher on bets that the Fed will cut rates and doubts about the Ukraine peace deal. Gold prices, meanwhile, rise on softer dollar and hopes for a Fed rate cut. India's new labour code makes minimum wage universal right for every worker. The central government may fix a floor wage that will differ across different geographies, but allow states that will fix minimum wage. The Labour Secretary tells CNBC TV 18 that a committee might be formed to fix a floor wage. US President Donald Trump speaks to Chinese President Xi Jinping. The two leaders discuss Russia, Ukraine and trade issues. The two leaders also agree to reciprocal in-person meetings. The first meeting will be in April in Beijing, followed by a state visit in the US by Xi Jinping later next year. And iPhone maker Apple is set to cut jobs across its sales teams in order to streamline its workflow and overlapping roles. All right, in yesterday's trading session, we did see that the Nifty logged back-to-back day of losses and started the week on a negative note. But yes, today is the monthly expiry day and we'll be watching out how the cues and the volatility take shape because we're starting off the day with a fairly positive global cues. But yes, for yesterday, we did see that Nifty slipped below that 26,000 mark amid the profit booking. It dropped about 230 points from intraday high as well. And broader end of the markets, they also exhibited weakness. Small caps, they logged about a fifth day of losses, while mid-caps also registered about second day of losses as well. But yes, among the sectoral indices, it was the IT stocks which held up quite well, despite the breadth of the market remaining quite weak and late selling which hit majority of the sectoral indices as well. But yes, among the worst sectoral indices which were hit, that included the likes of realty index, which logged about 2% losses. Metals also declined in yesterday's trading session. Consumer durables also led the declines. But yes, mid-cap and small-cap indices, both of them remain under selling pressure. Small-cap index has now slipped below its 200-day EMA as well. Now, today we'll be watching out how the cues shape for today in today's trading session as well. But as for cash flows position of where we stand, FIIs, they stood as net sellers. They sold stocks which was worth about 4,000 crore rupees in the cash markets. Meanwhile, DIIs, they were the net buyers and bought stocks which was worth about 4,300 crore rupees in the cash markets itself. Coming to the option cues data, where we stand, Nifty put call ratio falling to about 0.77 from 1 levels in the previous session. As I was mentioning, that the market breadth has turned weaker in the past couple of sessions, and that's why you can see that the Nifty put call ratio has also fallen in the last session as well. But yes, among the stock that continues to be a part of the F&O ban, that is your SAIL and Samman Capital, and no new stocks has been added and none of the stocks has been removed in the F&O ban list as of now. But let's take a quick look at the pre-open rates of where we stand as of now. If you look at Sensex, that is up by about 120 points. Nifty is also holding up well with about 26 points, 26,000 levels as of now where we are at. So all in all, we are seeing that, majority of the sectoral indices in yesterday's trading session were also hit because of the late selling pressure, which weakened the breadth of the markets as well. Mid caps and small cap indices, like I was mentioning, has been logging on losses back-to-back day, and small cap index particularly will be watching out today in today's trading session whether or not a recovery takes shape, given that small cap index has already logged about 5th day of losses. Whether or not they break the 5-day losing streak is something that we will be watching out in today's trading session. But like I was mentioning, it has been the monthly expiry day itself, so some volatility could be washed out in the market in the second half of the trading session as of now. But yes, let's take a look at how Nifty has panned out in this series itself. We did see that in the past couple of sessions, Nifty has exhibited a bit of a range bound trade. But yes, so far this month, if you look at this, index is already up by about 0.1%. But yes, it's been a tight and a range bound day for the Nifty as well as of now. But yes, like I was talking about the mid-cap index, they have outperformed the broader end of the markets, while the small caps continue to slip in the negative territory. But some interesting brokerage notes that came in today morning, where JP Morgan has given out an overweight call on Reliance Industries. They believe that despite Reliance Industries outperforming so far this year, the valuations remain quite attractive at the current levels. Now, they've given out an overweight rating on the counter. They've given out a target price of about 1727 rupees per share, and they believe that the earnings growth outlook is quite stronger and the refining strength could drive the upgrades as well. They believe that some of the catalysts for this year could be the tariff hike, new energy, retail stability as well, and Jio IPO, which could support the view for Reliance Industries as well. So, of course, so far this year, the big boy has already gained about 27% YTD by surpassing the Nifty's 17% rise so far this year. So, that's the view coming in for Reliance Industries. We also got some interesting note on LG Electronics, where Jefferies has initiated a buy call on the counter, and they've given out a target price of about 1900 rupees per share, where they believe that the company is a strong discretionary play at the current levels. Of course, we did see a blockbuster listing that came in for LG Electronics. So this comes in as a positive note on this particular front as well. What Jefferies has been saying for LG Electronics is that the company is viewed as a strong India discretionary play, and the cash reserves is something that is supporting growth, and currently the company has been trading at a discount to peers. So they are seeing that there is a certain bit of a valuation comfort for LG Electronics as well. So yes, those were some of the top brokerage notes that came in this morning, and of course we'll be watching out for how these individual stocks perform in today's trading session, whether or not some enthusiasm is getting boosted by some of these global brokerages upgrading these counters as well. But yes, to understand more about how the trade setup looks like, let's quickly get on board with our technical expert of the show. Joining me is Thakkar of ICICI Securities. Jay, good morning. I mean, Nifty has declined for the second straight session, and we were expecting record highs, but now we are down below 26,000. So what are we watching out next?
Good morning to you, Lovisha, and thanks for having me on the show again. And yes, Nifty has been struggling since past 2 days. We have been seeing that Nifty has got into some correction or corrective mode. And yesterday's last hour sell-off could be attributed to the MSCI reject It was a semi-annual rejig of the MSCI, so that could be one of the reason. But what's more concerning, the vision from here on is the India VIX, the rise in India VIX, which happened on Friday. Uh, Although the IVs of the Nifty didn't move up, it was still trading below 10 in the Friday's trading session. But yesterday we saw that India VIX, despite it was down by 6.5%, it managed to recover well at the end and again closed beyond 30. And interestingly, the IVs of Nifty, in fact, jumped from 9.5 to almost 13.2 to 13.5. And that is something which is a concern in the near term. So, although, the global markets have bounced back on the hopes of, further rate cut by the Fed in December, because the chances of the same has jumped from 77% to almost 90% now is what that is what I've updated recently. And that is what I've read. But then, as well as the positive talks between the US president and the Chinese president, which is why the global markets are cheering today. And we see most of the uh, or maybe Shanghai and Hong Kong markets trading with a positive bias with more than 1% up. Apart from this, what Lovisha I see is that the breadth of the market is still negative, and that is what is reflected in India VIX. So from here on, if you ask me what is expiry looking today, I don't see expiry beyond 26,100. Nifty looks difficult to break 26,100 for today. There has been huge call base there at 26,100 and 200 strike, which has got added even more with yesterday's sell-off. However, the bank Nifty is relatively outperforming, which was almost flat in yesterday's session. So I think Bank Nifty would be supportive. IT could probably be supportive because there are early signature or signs of IT stocks, mainly the large cap IT names showing signs of short covering. So these are the two sectors along with the Reliance, if at all, there is support at around 1500 levels. So these three can help the Nifty to sustain beyond 26,000 if at all. Whatever weakness in these three, IT, banking, and Reliance, would make it difficult for Nifty to trade beyond 26,000. But even if there is a strength from these three sectors, I don't see Nifty moving beyond 26,100 for today. And on the flip side, I would say that it has got intraday supported around 25,800. So the expiry I'm expecting to trade within this 300 points range, right, which is a bit more than 1%, right? And if I have to take a tighter range, then if it all Nifty sustains or trades below 26,000, then it could be a possibly 200 points tighter range of 25,800 to 26,000. So I'm not seeing major move today unless it breaks about 26,100 on Nifty. And so far there has been almost 50-55% kind of a rollover in the Nifty Bank Nifty. So today being a monthly expiry, we need to watch out for the rollovers also. So expect some volatility today as well in the markets. That is what is the IV signaling as far as the yesterday session is concerned.
That's right. That's right. Yeah. So 300-point range, that's where you're expecting the Nifty to trade at as of now. But yes, Jay, what about the broad end of the markets, particularly for small caps, because they have logged about fifth day of losses. So how should investors approach it at the current juncture?
No, as of now, one should be cautious out there for sure. Reason, as I said, Lovisha, is that the India mix, which represent the overall market, right? And IVs is basically representing that particular underlying, right? So India mix is signaling that there could be possibly a further pain. So that is not giving me comfort because after 3 to 4 months, you are seeing these levels on a sustained basis.
Okay, okay, all right. We'll watch out how the broader end of the markets also move in today's trading session. Just a couple of seconds before the first trades come up on your screen right now. So we have opened in the green, but it's very mild to a positive start as of now. Nifty 50 still with about 32 points gain. That is what is coming in the first trades, and of course it's a very flat to a positive start. Despite how the global markets have reacted overnight, we did see heavy set of gains that came in for the US markets. Asia Pacific markets also traded with modest set of gains on the AI trade play after Google launched their Gemini 3, which is your new AI model as well. So yes, on the back of that global optimism, we are fairly underperforming as of now. You look at Sensex, Sensex is down about by 84 points, flat to a negative start as of now. So yes, we are quite wobbly in the initial minutes of the trade as of now. Bank Nifty also showcasing a loss of about 0.1%. You can see Bank Nifty also not doing well. Among the broader end of the markets, small caps has started mildly positive in the trade, 0.1% gains coming in from there. But mid caps continue to sulk. They remain under the selling pressure and, of course, in the red band as well. Let's take a look at some of the sectoral gainers. Of course, the IT stocks were one of the top gainers yesterday on the Fed rate cut bets. And today, however, it's seeing a little bit of a selling pressure. Nifty IT down by about 0.5% itself as of now. Nifty Auto Index has also been sulking in the trade with about 0.2% losses. Nifty Metal Index, after some consecutive losses, it's seeing some bit of a pullback as of now. 0.4% gain coming in for the Nifty Metal Index. Pharma Index is also seeing a bit of a pullback, flat to a positive start. On the other hand, PSU Banks is also holding up well with about 0.2% gains. Nifty Realty Index, after yesterday, yesterday we did see that the Nifty Realty Index was one of the top sectoral underperformers. 2% decline came in for the index itself, and today it's holding up well with about nearly 0.3% gain as of now. But yes, it's a very mild start to the market. And if you look at some of the top gainers and losers on the Nifty 50, you can see Max Healthcare has been doing well with about 1% gains as of now. We did see a good brokerage note also came in for Max Healthcare, where Citi has given out a buy call on the counter, and they believe that the cashless insurance issues are quite fully resolved, and they believe that the 3 brownfield projects that Max Healthcare is expected to start in Q3 is expected to trickle some benefits. So that's a good brokerage note that came in, and that's why you can see Max Healthcare doing well. 1% gains coming in for the counter. Dr. Reddy is also doing well with about 1% gains. Asian Paints also holding up well. Titan, SBI, some of the other gainers on the Nifty 50. However, on the flip side, you can see SBI Life once again sulking in the trade, nearly a percent cut coming in for there. Reliance Industries, despite a positive brokerage note, is also sulking in the trade, 0.5% cut coming in for there. ICICI Bank, Tech Mahindra and Trent, some of the other losers on the Nifty 50 as of now. So yes, that is what the trade looks like in the initial minutes. But yes, coming back to IT stocks on how we are poised. Coming back to you, Jay, I mean, IT stocks today, of course, it's seeing a bit of a profit booking, but we have seen that, in the past 1 month, the index has done overall quite well, given that how the consensus buy has been emerging for the overall sector after better than expected second quarter performance.
Yes, IT stocks are trading with a negative bias today, or maybe some flat kind of a trade today. But then, Lavisha, as I said, there are early signs of short covering out here. We need to see the rollovers happening today, and that would further confirm what is likely to happen in the December series. As of yesterday, I think that yes, IT is likely to bounce. Maybe the index can go up to 40,000 levels at least in the near term, and mainly that would be because of the large cap IT names. Lavisha, Infosys, TCS, Wipro, HCL Tech, all of this to perform. I mean, HCL Tech has been doing relatively better only, but otherwise, you have to see within sector. Lavisha, what we have seen is that within the IT sector, so far the mid-cap IT names have outperformed the large cap IT names. Now is the time for the large cap IT names to see their short covering and probably outperform. And that is what will help the Nifty IT to move at least until 40,000 levels, is what I believe in the near term. So this is one sector which I think could be a bet from the short covering point of view. Hence, it should not be an aggressive bet. It could be a short-term play.
Okay, all right. These are some of the stocks that we need to watch out also from the IT space. But let's talk about one individual mover, that is your Bharat Electronics. We did see a corporate update yesterday, and that's why the stock has been holding up well in today's trading session. Well, the company and Safran Electronics, which is in France, they have signed a joint venture cooperation agreement for the production of Hammer, which is your smart precision guided air-to-ground weapon in India itself. But yes, today the stock is showcasing a bit of a gains. Jay, how does the stock look like to you? Of course, we've already seen a good amount of rally in Bharat Electronics, but what does the near term indicate?
See, overall, BEL so far has performed quite well. It did quite well within the defense team, but then the kind of sell-off which we've seen since past couple of days in the overall defense names, Lavisha, I believe that one should be avoiding defense as a sector in the near term. There are a lot of shorts that are getting built up. They've already, this sector has seen shorts. Shorts are getting built up. When you need to see the rollover today, if those shorts are getting carried forward or rolled in the December series, then that would not be positive. That would not be positive for the sectors. So I think this is one sector which one should be avoiding. In fact, any bounce such like this, if at all someone is stuck at the high levels, should be utilized as an exit opportunity.
Hmm. Okay, okay. That's the view from Bharat Electronics. Let's take some of the viewer queries that is dropping on our live feed as well. The first query coming in from Dheeraj Sharma. He's asking, he's been holding 20 shares of KPIT Tech at a 677 rupees per share, and he's asking whether he should sell or accumulate to hold for the long term to expect more profit. Of course, KPIT Tech, it's been a underperformer so far this year, Jay. But the management did indicate in their second quarter earnings call that the second half would be better than the first half, and even FY27 could be better for KPIT Tech. But from a technical perspective, how does the stock look like to you?
Out here, the data I would say is not that supportive, but all I could say is that yes, Lavisha, here too we did see some shorts getting built up, but then some shorts have covered as well. So the data relatively, I mean, we don't see much of shorts out here as compared to the large cap IT names, as I said. So only a break beyond the levels of 1250 could trigger a good upside. Till then, one can be avoiding this stock because someone wants to build a fresh position. If someone has it, I think one should be holding it with a stop loss of 1150. If 1150 breaks, it will slip down to 1000, and if 1250 breaks, it will inch higher towards 1400, 1350 at least.
Okay, all right. 1350 at least for KPIT Tech. That is something that we need to watch out for. Let's take another viewer query. We have Satya who's been asking the view on United Spirits and Som Distillery for a fresh long position. Jay, what's your view on both the counters? If we look at from a year-to-date perspective, Som Distilleries has outperformed, but both of these counters have entered into a zone of consolidation.
You are right. I mean, United Spirits definitely has entered into a long consolidation. Recently, it has witnessed a little short covering move, and we had a positive bias there. We still have a positive bias. As a disclaimer, I would like to also say that we have a long positions already open in United Spirits, and we are expecting that in the near term it can reach towards 1500 levels. Still, 1370 levels are held. So relatively, we are positive on United Spirits, I would say.
Okay, all right. More bullish for United Spirits over some distilleries then. All right, let's take another viewer query. We have Naveen who's been asking the view on Shriram Finance and the entry level specified for the counter. Of course, we did see that the stock hit a new high and there was some, brokerage commentary which also came in, which was quite bullish for Shriram Finance. And in the past 1 month also, the stock has done quite well. Jay, what can we expect the next target levels to be? I mean, the stock already has hit new high, but from a technical perspective for Shriram Finance?
We have a short-term view positive on Shriram Finance, Lavisha. As a disclaimer, I would like to say that we have recommended this to our stocks for the short-term point of view for the December series. So I think that till 800 levels are held, Shriram Finance trend is positive at least for a target of 900. Till 810-20 levels are held.
Okay, okay, all right. Good positive view for Shriram Finance for December series as well. All right, let's take another viewer query then. We have PKB Sahai who has been asking the view on City Union Bank for the next 4 months. And already the stock has seen quite a bit of a good uptrend so far this year as well. And past 1 month also the stock has done quite well. Jay, what's your view? Can the stock extend its rally?
City Union Bank, yes, from a medium to long term perspective, I think yes, Lavisha, because after a long time, the stock managed to actually surpass the levels of 200, 220. So now, till it doesn't move, come fall below 220, I don't see a major issue in City Union Bank, at least from the medium to long term point of view. Short term, there could be some consolidation, but from medium to long term, I think that till it is holding, in fact, 230 as well, not even 220. So 230 to 30, 220 to 230 range, if these levels are held, overall the stock outlook is positive.
Okay, okay, all right, all right. All right, let's take another, stock in focus. That is your Paras Defense. The stock has been holding up well after the company said it has signed an MOU with the Inter-University Accelerator Center, which is in New Delhi, to jointly develop commercial-grade MRI magnet systems in India itself. And today the stock has been holding up well. Percent gains coming in for Paras Defense. Jay, coming to you, I mean, the stock has entered a consolidation zone from those 900 odd levels that it had hit in the month of July. But from a near term perspective, how does Paras Defense look to you?
You're right, it has entered into that consolidation phase, and as I said, overall defense. The outlook for this sector based on the derivatives data is not positive. And although this stock is not in the derivatives, it's a non-derivative stock or non-FNO stock. But then the quantitative data indicates that 775 to 800 range on the upside will act as a very critical resistance for the stock. Lavisha, until those levels are not taken off, probably any bounce should be utilized as an exit opportunity because the stock must see some correction in the near term or maybe consolidate for some more time before actually inching up higher again.
Okay, all right. Some consolidation could be warranted for Paris Defense then. All right, let's take another viewer query then. We have Satya who's been asking the view on levels for Sagility to watch out for trading strategies. For the month of October, we did see that the stock had hit about 54 to 55 odd levels, but right now the stock has cooled off, about 10% downtake coming in for Sagility. And today also the stock has been showcasing a decline of about nearly a percent. Jay, Sagility, any thoughts on the counter?
I'm sorry, I would not be able to comment on this as I don't track this. So the data is also very less. I mean, it's since November, it's a 1 year data, and hence I have not been tracking this stock.
Okay, no worries. All right, let's take another stock in focus. 0.5% gains coming in for there. That's Hudco. The company did sign an MOU with the National Institute of Urban Affairs to deepen its cooperation across the urban infrastructure and some of the development initiatives as well. But the stock has been quite sideways, 0.3% gains coming in for the counter. If you look at the past 1 month, also the stock has been relatively sideways as well. So far this year, the stock has been quite range bound. But yes, Jay, Hudco, any thoughts for the counter? What does the near term indicate? Can the sideways momentum continue?
You're right. There is a positive news out here, and I think that till 220 levels are held, there is a good chance of this stock again bouncing back to 240. This stock also has been, trading within a broader range of 200 to 250, broader range, 200 to 250, and a tighter range or a shorter range within that has been 240 to 220. So till 220 levels are held, again it's 240. From 240, it can again see 220. You never know that. But beyond 240, it will see 250, and only about 250 there would be an ultimate breakout. Okay. So that is what the overall setup for the Hutco is technically. From a derivative perspective, Lavish, I would say that yes, we have seen some recent long build-up in this stock. So yes, till 220 levels are held, there is a chance that this stock again can bounce back to 240 levels.
Okay, all right. 240 levels could be the next level that we can watch out for Hudco, as long as 220 is something that it sustains through the near term. All right, let's take another viewer query. We have Komal Makhija, who's been asking the view on the pharma space and whether it's the right time to enter the pharma sector. And she's asking particularly for Sun Pharma for a fresh entry level for the next 6 months to 1 year time horizon. Of course, in the last couple of sessions, we've seen that Sun Pharma has done quite well, and in fact, it's been building gains since the month of September itself. But yes, Jay, for Sun Pharma, what does the near term indicate? And of course, any views on the entire pharma space as well?
See, entire pharma space was looking very positive, but the last big sell-off in the pharma has somehow again, get this sector into a consolidation in the near term. Although Sun Pharma has been outperforming until 17 or 40 levels are held, I think it can still slowly inch towards 1850 levels. So relatively, Sun Pharma is looking better within the pharma names, is what I can say as of now.
Okay, all right. That's the view coming in for Sun Pharma as well. And in the entire pharma space, let's take another viewer query. On that note, we have Preeti Singh, who's been asking the view on Hyundai Motors at the current levels and whether it is good enough for averaging the current investment. We did see a good set of numbers that came in from the second quarter for Hyundai Motors as well. And the stock has relatively done well in the past couple of sessions as well. Today also the stock has been sideways, but 0.3% gains coming in for Hyundai Motor. Any thoughts, Jay, for Hyundai Motor, and what does the near term indicate?
Well, see, the overall auto has seen a good run up. We all know the reason behind that. Good demand, GST cut, and all of that. In the near time, if you see, Vishal, then the two-wheeler space is relatively outperforming the four-wheeler, where you see TVS is doing better, Hero is doing good, Eicher is doing good. Eicher is a mix, but then has two-wheeler as well, so that is doing good. Bajaj Auto is likely to do good on back of short covering. The four-wheeler names like M&M and Maruti have done relatively better in the recent past than Hyundai, Tata Motors, and Ashok Leyland has also done good. But Hyundai, see, overall long-term outlook for auto is positive for sure. Short-term going forward, if at all there is some profit booking, then that cannot be ruled out, right? So
Hmm.
Hyundai should be a buy on dips for me as of now, rather than buying at this moment.
Okay, okay. Buy on dips for you at the moment for Hyundai Motors then. Right, let's take another viewer query on that note. We have Alex who's been asking the view on Kajaria Ceramics for a short-term trend horizon itself. What's your view, Jay? The stock today, Kajaria Ceramics, has been quite flat to positive. But if you look at from 1200 odd levels, the stock has cooled off. Nearly 10% decline that came in for Kajaria Ceramics.
See, Kajaria has actually had shown a good rally from almost 750 to 1300, and thereafter it's been correcting. I think it's a good buy on dip stock as of now. So although it's overbought from the long-term point of view, but from the short-term point of view, I think buy on dip should be the strategy around the levels of 1000.
Okay, all right. Buy on dips strategy for 1000 odd levels for this particular counter. All right, let's take another view query. We have Shivakumar who's been asking the view on AU Small Finance Bank, and he's asking, what's the view on the counter because since it has been given the commercial bank license itself. Of course, in the past 1 month, the stock has seen a good uptrend. 7% gains came in for the counter, and so far this year also the stock has been quite spectacular. Jay, any next target levels that you're watching out for AU Small Finance Bank?
And this is one good stock, I would say definitely. And Lovisha, from the medium to long term perspective, I'm saying that till 850 levels are held. I mean, we can see this stock inching towards probably 1100 as well from the medium term point of view. Short term, I think there should be a buy on dip strategy around 900, right? Because at 930, if you have a stop loss at 850, it would not be a good risk reward on the short term point of view. But around 900 buy on dip should be the strategy out there. But from the medium to long term point of view, you can still buy at these levels as well.
Okay, all right. 1100 levels, that is the next target we can watch out for you, Small Finance Bank then. And 900 is the support levels. All right, with that, let's take another viewer query. We have Contact who's been asking the view on Inox Wind for a short term investment horizon. The stock has not done well in the past couple of months as well. The stock has been exhibiting some negative downtrend. But yes, Jay, how does the counter look to you? I mean, is there any scope of rebound or recovery or any pullback, or is the downtrend expected to continue?
Well, see, Lovisha, here we are seeing shorts getting built up out here on Inox Wind, and my outlook for this stock is negative. I think, below the levels of 120, that is a major support for this stock. Below 120, it could see some further selling pressure. So out here, my view is definitely negative.
Okay, all right. It's going to be negative for Inox Wind then. Let's take another viewer query. We have Aisha who's been asking the view on Lemon Tree, and she's saying that there's been a continuous fall in the stock in the past couple of sessions. Of course, we've seen that the stock from a high of about 170 odd levels in the month of September has declined to about 12% as of now, 150 odd levels where it has been. But yes, Jay, Lemon Tree, how does it look like to you? I mean, if you look at the year-to-date chart for Lemon Tree, it's still been an underperformer, 5% declines.
The hotel names, Lavisha, we all know have done significantly well. I mean, since 2020 lows, this has been one sector which has really gained quite a lot and has outperformed quite a lot, or maybe delivered good returns. And now, after such a huge rally, definitely this sector can see some consolidation now. I mean, the in the short term, although the long term spending and the per capita income and all that story is intact with the GST cut and all of it, right? So that is not an issue. I mean, with all the measures which the RBI is taking, the FM is taking with respect to the income. So because the spending increases, the RBI has decreased the GST, spending increases. So all of this fundamental story is still intact from a medium to long term point of view. From a short term point of view, since this stock had rallied quite a lot, I think that could be some consolidation or correction. I think hence buy on dip should be the strategy out here. But however, if you ask me within the hotel space, I think even if I look at the Indian hotels for that matter, from the derivatives perspective, I would say that that too has seen some correction or consolidation, right? So the stock like Indian hotel, if it all also sees some correction or consolidation, I mean that could be seen in other stocks as well. So I think that till this consolidation is not over in the overall hotel space, one should be avoiding this sector. Not from the investment point of view, but at least from the trading angle.
Okay, okay. All right, all right. All right, Jay, just one last question before we let you go. Any topics that you want to underline in this market right now?
Well, there are a couple of them. I would say that one is, and as a disclaimer, I would say that we have recommended this to our clients as well. Also, when you asked this question, actually, I mentioned that yes, Shriram Finance with from the financials, I think should be outperforming because stocks like Bajaj Finance and all are trading with a negative bias, and I think hence the money flow should be out here. So one can buy Shriram Finance with a stop loss of 810, targeting around say 870 to 900 going forward, but a strict stop loss of 810 because see, as I said, India mix is going up, so the stop losses has to be tighter and strict. Second, buy recommendation would be on Eicher Motors. I think today's dip should be utilized as a buying opportunity because overall we have seen this stock actually breaking out above the levels of 7100. So that is another stock which we think would continue to outperform within the two-wheelers names. So that is one stock, and Dr. Reddy would be a conditional buy. It would be a buy beyond the level of 1260. So beyond 1260, if Dr. Reddy moves the Visha, I think it can inch towards 1350 as well. Right. So that's a conditional buy. Rest two are the buy at the current market price as well.
Okay, okay, all right. All right, those are the stocks that we need to watch out for. But with that, we have to let you go, Jay. Thank you so much for your time and joining us and answering all our viewer queries.
Thank you. Pleasure being on your show, Lovisha. Thank you.
Thank you. All right. Let's take a quick check of the markets of where we stand as of now. Of course, there's been a little bit of a recovery in the markets, despite what we started with a flat note and, of course, with a flat with a negative bias. If you look at Nifty, it has perked up and it is above that 25,970 mark as of now. A flat to a positive, gains for the Nifty 50 index as well. So it's quite wobbly. But yes, of course, there are some volatile moves which is coming in for the markets as of now. If you look at India Wix, that has cooled off by about 6% as of now. If you look at Sensex, also up by about 66 points. Very flat to a positive, bias for the Sensex as well. But among the sectoral indices, it's the Nifty IT index has been sulking in the trade, but it has trimmed some of its losses from what we saw in the earlier part of the day. 0.2% declines coming in for the Nifty IT index. On the other hand, if you look at Nifty Auto Index, it has turned positive, flat with a positive bias. If you look at, on the other hand, if you look at the Nifty Metal Index has been soaring in the trade, nearly a percent gains coming in for the metal packs. And if you look at the Nifty Pharma Index is also exhibiting some bit of a gain with about 0.1% gains as of now. So yes, if you look at the market breadth has turned a little bit of a positive despite what we saw yesterday. So yes, that's a positive takeaway that we have to take as of now. But whether or not this sustains throughout the day is something that we need to watch out for. So yes, that is something that we need to watch. But yes, before I move on to our next guest of the show, let me introduce you once again to Money Control Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Money Control app and subscribe to Super Pro today itself. All right, with that, let's quickly move on to our next guest of the show. We have Sneha Poddar, Vice President Research Wealth Management at Motilal Oswal Financial Services, joining us. Sneha, good morning.
Good morning.
Sneha, we had an interesting note by you guys yesterday where you have upgraded selective names from the IT sector, arguing that the benefits for the India from being an AI services country would now be beneficial. So take us through that and why you believe that the next few quarters could be bullish for the sector.
Okay, so basically, the reason behind the upgrade is that we believe that the AI cycle is likely to start for the IT company. So we were waiting for that cycle post the cloud computing cycle that was witnessed from FY 15 to 18. So post that, the new cycle is now about to start, and this we believe will be from FY 27. So keeping that in mind and keeping that the valuations have turned really attractive for the companies and the risk reward is very favorable. Plus, at the same time, if you notice the rupee is softening, and also the odds for the the Fed rate cut is for the December rate cut is increasing. So all this really points towards the that the technology sector can do well from here. If the rate cut does come in, the overall the health of the US economy will start improving, and that will result in more and more deals getting announced. So with that in mind, and it's so largely what really drove this positive view was we see that the AI service cycle is at the we have been waiting for that quite some time, and now there are green shoots that the we are at the cusp of starting this cycle. So though it's a quarter or two probably a little early, but then we believe that timing cannot be possible, and thus one can actually start participating when the valuations are really attractive. So that's why we upgraded Emphasis and Zensar to buy, wherein we were earlier neutral on these companies. So even these companies, along with TechM and HCL Tech and Hexaware, will be benefiting from the AI led investments, and that makes us positive on the entire sector.
Okay. Sneha, but there's an argument over this entire AI debate that the return of investment and the revenue which will get trickled for the entire IT sector is something which is quite uncertain. So at this particular point, is the valuation comfort the only reason that we can actually accumulate, or is there some basis that, from a long-term point of view, something that investors can actually accumulate at the current levels?
Okay, so as I mentioned that we are a quarter or two a little early in anticipating. So we are expecting the cycle to actually gather pace from FY27. And so the reason why we saying this, there are some positives that are coming through. Probably once the India-US trade deal goes through, and if the US Fed continues with its rate cut, all this will provide some support to the US economy. And if the overall health of the US economy starts improving, then obviously the entire investment cycle will start improving, and the next investment cycle will be largely led through AI. So that is our belief. So that's why I said probably we are a quarter or two early, but then from FY27, by that time the US economy will also hopefully start doing well. So that should trigger the the positive momentum for the companies. And why we are suggesting at this juncture, because the risk reward is extremely favorable for the IT companies, and that is why in this market, when majority of the pockets are looking quite expensive. So from that perspective, there's a lot of comfort in the IT stocks, and so one can start accumulating at these levels.
Okay. What about the Fed rate cut bets? I mean, we've seen that a lot of optimism have built into the tech sector after the New York Fed president has indicated that the Fed could opt for a rate cut as soon as in the month of December as well. Which camp are you leaning in as of now? I mean, are you anticipating a rate cut in December?
See, it's very difficult to pinpoint as such, but then if you look at the probabilities, the number which has come out, so the probability has gone up to 80%, which last week, I mean, till Friday, it was less than 30%. So this really shows a lot of optimism, a lot of confidence, and a few of the Fed officials have also provided hints towards the possible rate cuts. So hopefully, I mean, it's anybody's guess, but then hopefully it should come in.
Okay, all right. Sneha, now that the earnings season is concluded, how would you say the story in this SMIDs versus large caps? I mean, does the conviction back to some of these high growth stories have returned, and how have these SMIDs performed versus the large caps as of now?
Okay, so overall, the earnings in Q2 was quite good. Now, if we talk about the large cap versus mid and small cap, so obviously, the large cap numbers were quite good, and only in case of mid caps were comparatively much better off than large caps, but there was some disappointment in case of small caps. So this is one of the reason, why small caps are not doing well. So while the mid caps, the numbers, the earnings were quite good, and in fact, we can say slightly better than the large caps. So there, the premium at which the companies are trading seems to be holding on. But in case of small caps, where the earnings are disappointing, the price performance of these small cap companies are also witnessing some sort of profit booking. And over last 1 year, if you notice, and especially over last few months, 5-6 months, the small caps have seen a lot of disappointment in terms of delivery, both in numbers and the stock price movement. Large caps, till last year, they were kind of the earnings were kind of slightly muted, but now over last 2 quarters, what we've seen is gradual improvement in their numbers. And this one of the reasons we can say is largely led through the policy supports that have come from the government. So the monetary and the policy supports both have percolated down, and thus we seeing some sort of improvement in these large cap earnings delivery, and that is what is reflecting in the confidence coming back in these large cap names, wherein the valuations were very comfortable, so the risk reward were very favorable. So now with earnings coming back, we seeing that the large caps are over last few weeks, it's only the large caps which is largely performing. So in nutshell, I mean, there's a comfort in large caps overall in terms of valuation. In mid caps, though the earnings delivery is there, but the valuations are little stretched. So we are being selective in mid caps, and in case of small caps, we have very selective stock specific approach, because there's a large disappointment which is happening on that side. So one has to be very selective in approaching the small caps.
Okay, okay. Some caution should be warranted in the small cap space. But, apart from IT, PSU banks have lately also seen plenty of traction. Of course, we have some FII limit hike news, some consolidation as well. Do you believe they are better placed versus private banks going ahead?
See, PSU, I mean, both, in case of banking, like what we are expecting is the mid-sized banks to do in particularly well, because in case of large banks already, they have witnessed sharp improvement. So somewhere, somehow, the base effect does come into play. But in mid and small cap, there's a lot of room and scope to improve further from here. Now, like PSU versus private banks, what we believe is that in case of PSU banks, the large rally has already happened, given the news flows which you talked about, with regards to the FI limits getting raised, and with the consolidation which is expected to happen with mergers happening across the PSU banks. So already in anticipation of that, the PSU banks have run up a lot. So though the valuation still remains fairly attractive, I mean, we can say that it's now fairly priced in. So one can make a switch from PSU to mid-sized private banks, because the further sharp hikes in case of PSU banks might be limited from here, because we've already seen a large rally. But in case of mid-sized private banks, especially names like RBL Bank, like IDFC First, and Federal Bank, they're in AU Small Finance. I mean, in such banks, if you see, there's a sharp improvement that we seeing in their overall business mix, and the asset quality has been quite resilient for those companies. And in few banks, with the recent management change, there's a new strategy, new thought process that has come in. So all this is driving and is leading us to believe that there's a sharp earning revival that can be seen in the mid-size private banks.
Okay, mid-sized private banks is something we need to watch out for then. Sneha, let's also talk about the consumer space. There's a consensus, buy on the consumer space as well when we are talking about. But yes, it's quite wide. We did see that staples underwent through some GST-related transition in the September quarter. QSR saw a soft quarter, but jewelry segment, that was something that did well. So how are you placed on this theme going forward for consumer, and which is the space, which is the one particular theme out of the consumer, which is something that you're bullish on?
Okay, in consumer, there are many sub-sectors, so you'll have to actually look at them from different lenses. So in staples, we are witnessing some mixed demand trends. So while the GST benefit will be witnessed across the sector, but if we talk about just the staples, in staples, the personal care segment witnessed some temporary disruptions, but then the packaged food segment is doing really well. In paints, we are witnessing some demand recovery, especially post the GST, obviously rationalization, and post a strong monsoon. And we also believe that the disruption led by the new players coming in, so that is now largely over, and the demand should stabilize from here onwards. The one segment that we are really optimistic in case of consumer is the beverage segment, wherein a strong shift is being witnessed towards the premium brand. So, the overall sector is doing really well, barring few states like Maharashtra and all because of the local taxes and all. So, rest all the states are doing really well, and with the rising income level and the urbanization trend, the shift towards the premium products is definitely rising, and the PA and the above category is extremely doing well. So in that segment, we really like Radico Khaitan, which is very sharply gaining market share in that segment, and because of the change in the overall product mix towards the premium segment, the margin profile is improving. So there, we are expecting 30% plus kind of earnings growth over next few years. Though the stock has done up a lot, but even from here, we are expecting the momentum to continue.
Okay, all right. Liquor industry is something that you're bullish on. What about cements? I mean, that sector has also seen quite a bit of a turnaround, but from a stock perspective, do you believe there is any good upside left?
Okay, so cement witnessed some sort of profit booking recently because of the extended monsoon and some price cuts that were witnessed across the regions. But now, with the monsoon over, the demand is expected to revive, though the capex intensity has not really picked up. But now, with the Bihar election over, we believe that the capex is expected to likely pick up. And in fact, the recent RBI commentary also points that there are some green shoots that the capex is likely to pick up. So, if that happens, the demand for the cement companies will improve, and that will lead to the price hikes initiatives by the cement companies, which is normally witnessed from January onwards. So, one can actually, start looking at this counter, need not go overboard on it, but then definitely it's a time that one should start looking at this counter. And among the large caps, we like Ultratech, and among the mid cap space, we like JK Cement.
Okay, all right. Now that we discussed a range of sectors that you've been positive on, anything that you would advise some caution and suggest investors to remain on the sidelines?
Okay, in terms of, caution, it's oil and gas is one sector which, there is some sort of pressure, especially in case of the OMC companies. So while the refining margins are doing well, and with the SGR, escalating to new highs, so the refining margins are doing good, but then the marketing margins have have gone down to negative numbers. So OMCs is one segment where we are really cautious upon. Then overall, in case of pharma, we are very selective because it largely hinges on the India-US trade deal. Till that the somehow the performance of the pharma companies are largely linked to the, I mean, though the tariffs have not been imposed on the pharma companies, but still, from the sentiments point of view, a lot hinges on the trade deal. And secondly, in US, the pricing in case of the generics is also it continues to be under pressure. So there are very selective pockets like biosimilars where the traction is being witnessed, or the hospital segment. Apart from that, rest of the healthcare segment is actually especially the generic segment is not doing well because of the struggles by the US economy.
Okay, all right. Pharma space is something that you would advise caution. All right, on that note, Sneha, we have to let you go, but thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets of where we stand. Of course, it's a monthly expiry day for the Nifty. And if you look at Nifty, Nifty has been trading flat, but with a positive bias as of now, holding above that 25,980 mark as of now. If you look at the Bank Nifty index, that has also come up in the green, 0.1% gains coming in for the Bank Nifty index. Broad end of the markets, they seem to be outperforming at this point of time. If you look at the Midcap index, showcasing a gain of about 0.2%. Small caps have also come back in the positive territory, flat, however, with a positive bias. Among the sectoral gainers and losers, if you can see, Nifty IT index has been sulking in the trade, 0.3% cut coming in for there. Media stocks have also been under selling pressure. Auto stocks, FMCG stocks, some of the other stocks which seem to be not doing well in this market. However, what is doing well, that is your some pullback which has been seeing in metal stocks, 1% gains coming in for the metal index itself. Pharma stocks also seem to be doing well, and while realty has also been holding well. So all the three sectors which were one of the top drags in yesterday's trading session is seeing a bit of a recovery as of now. But yes, we are at a very mild to a positive start as of now, and well, let's see how the second half of the trading session pans out, given that it's also the expiry day for Nifty as well. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll discuss how the market is developed with our experts, and we'll be also discussing some of the individual stock movers which grab the headline. But until then, signing off, do stay tuned to moneycontrol.com.